Semiconductor stocks are attempting a major comeback this morning, and the Nasdaq is leading U.S. futures higher after 3 consecutive declining sessions. This is the pre-market setup for Tuesday, July 21, 2026, updated at approximately 8:25 Eastern Time. The overall market bias is cautiously bullish. S&P 500 futures are higher by roughly 0.4%. Dow futures are up about 0.3%. Nasdaq 100 futures are showing the strongest move, rising approximately 1.2 to 1.3%. Russell 2000 futures are also moderately higher. The improvement is being driven primarily by semiconductors, memory stocks, and artificial intelligence infrastructure companies. Sandisk is up more than 7% before the bell. Coherent is also up around 7%. Max Linear and Western Digital are each gaining at least 6%. Nebius Group is rising after NVIDIA disclosed that it increased its ownership stake in the AI infrastructure company to 9.3%. This rebound follows a difficult stretch for technology stocks. Traders should remember that a strong gap after a sharp correction can be either the beginning of a recovery or simply a short-term bounce. The opening range will be important. The second major market driver is earnings. Companies reporting this morning include 3M, General Motors, Charles Schwab, Halliburton, D.R. Horton, Novartis, and Northrop Grumman. Investors are focused on company guidance, industrial demand, automotive margins, housing conditions, and energy services activity. Later this week, attention shifts to several major technology companies, including Alphabet, Tesla, Intel, Texas Instruments, and IBM. Expectations for continued spending on artificial intelligence remain an important support for the semiconductor sector. The economic calendar is relatively light today. No major high-impact U.S. release was identified before the opening bell, and no significant Federal Reserve speech is scheduled. That means earnings, company guidance, tariffs, oil prices, and geopolitical headlines may have a larger influence on trading. There are also important cross-market signals. The 10-year Treasury yield is around 4.6%. That remains relatively high and can create valuation pressure for expensive technology and growth stocks. Volatility is in the high teens. That represents normal to moderately elevated market uncertainty, but it is not a signal of extreme fear. The U.S. dollar remains firm. Oil prices are elevated because of geopolitical concerns. Gold futures are higher, and Bitcoin is trading near $66,000 with a positive move. These signals show improving risk appetite, but they do not remove the risks created by high yields and elevated energy prices. On the downside, First Citizens Bank shares is falling more than 38% following an earnings-related reaction. Equifax is down roughly 11% after a weaker profit outlook. Danaher, MSCI, and Genuine Parts are also under pressure following company results or guidance. 3 stocks deserve especially close attention. The first is Sandisk. It is showing one of the clearest liquid gaps in the memory group. Watch whether the stock holds its pre-market low and remains stronger than the broader semiconductor sector. The second is Nebius. The confirmed NVIDIA investment provides a direct catalyst, but AI infrastructure names can be extremely volatile. Watch whether volume supports the opening move or whether the gap begins to fade. The third is First Citizens Bank shares. The size of the decline creates major volatility and price discovery risk. Wide spreads and sudden reversals are possible, so disciplined position sizing is essential. For leveraged ETFs, SOXL and TQQQ may attract attention if semiconductor and Nasdaq strength continues. SOXS and SQQQ may become relevant if the opening rally fails. These products reset daily and can experience volatility decay. A sharp move does not automatically make them suitable for a trade or a longer-term position. The biggest market risk today is a failure of the semiconductor rebound, combined with a further rise in Treasury yields or a sudden geopolitical headline. The strongest market catalyst is renewed demand for AI, semiconductor, and memory stocks ahead of major technology earnings. The opening strategy is straightforward. Mark the pre-market high and low. Let the first 5 to 15 minutes establish direction. Require confirming volume before following a gap. Set the stop, profit target, and maximum loss before entering. Do not chase a stock simply because it is already moving sharply. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.